And I think it's in keeping with Adam Dawes' M&A thematic, and that is CSL. Big news today, of course. Still speculation, but out with reports of a potential $10 billion acquisition and multi-billion-dollar equity raise. The giant confirming today that it is in talks with an offshore party, with a final agreement potentially on the table within weeks, although the company went so far as to say that often they do these sorts of exploratory conversations, then it doesn't necessarily mean that it will result in a deal. So today in shares, coming under a bit of pressure, down by 1.6%. Adam Dawes, I'll start with you when it comes to CSL, because you know, it's stalwart in many portfolios. It's been a long time since we've seen some sort of a big acquisition coming from CSL. So does this get you excited?
Well, $10 billion always gets anybody excited, I think. Certainly, that's the first thing.
Certainly the investment bankers.
Yeah, well, that's the thing. The investment bankers, there's not many investment banks that can cover or underwrite a $10 billion raise. Now, it's going to be equity plus debt, so we need to be a little bit careful. It's probably going to be a $4 billion equity raise. But Bank of America is probably the only one that can really go into that. In fact, then they'd probably have a consortium of bankers to sort of back it up as well. So that's the first thing. The second thing is, with mergers and acquisitions coming into Christmas, there's not a lot of research, there's not a lot of stuff that's been written. CSL, obviously, we know a lot about. So this is a big one for these guys, and I think it's fantastic that CSL is trying to do this. We know that a lot of companies, especially the Australian companies, come out to the market and they try and go overseas and come back with their tail between their legs. But CSL, Sonic Healthcare have been the ones that have actually been able to do it going forward. So is it VIFOR? How do you say that?
Yeah, I'm not sure.
All right. Well, anyway,
it's in Switzerland.
There we go. The Swiss company. The Swiss company basically rocketed up 20% last night as well on the back of all of this sort of speculation. So that CSL's trying to temper it down a little bit. But it makes drugs for kidney and iron deficiency. So it's quite an interesting area. In the wheelhouse of what CSL does. So look, if anyone's going to be able to do it, CSL can. Obviously a little bit of pressure on the stock today, and that's to be expected, but a lot of water to go under the bridge before these guys can actually say, yes, we're going to take this business over. Today,
trading at $299.83, just below that $300 mark. So in keeping with the spirit of the program, is it a buy, hold, or sell?
Look, I'm always really comfortable with CSL, and I think CSL is a fantastic business. So I'm going to go out and say it's a buy, but with caution. We want to see how this is going to play out. Obviously, it's a $4 billion raise of equity. It's going to have to be done at a discount. So potentially, you know, you buy half of what you are going to do now, but then wait for the cap raise or wait for that and then take up the rest of it in that cap raise. That's probably the strategy as of today.
Thank you. How about your view on CSL, Scott Phillips? Is it a given that this is a company that's going to continue to grow? Its share price will continue to grow along with it. You've got faith in management that they will be able to execute this acquisition if it does happen and then move forward with it.
Yes, no, yes, and yes, I think in order. 4 questions then and there, but I'll do my best to try and wrap them up. Look, management are great. This is a very high quality company. The long-term performance has been astounding. $140 billion business. It's a really great Australian success story. My biggest question on CSL is the evergreen question, which is simply, when you're this expensive and this big, can you add enough revenue? Can you add enough profit without, by the way, raising more capital? Otherwise, you're not really adding value. You're kind of just, grabbing new shares to make the deal done or to get the deal done. Can you really continue to grow at a fast enough rate? And think about the sheer dollar value of the growth. Every year you've got to add billions of dollars of revenue just to get the growth you're looking for. And that gets harder and harder, as compounding does every single year. When you're already this big, I'm not so sure. I don't think I'd want to pay 44 times for CSL. I just got to say, I wouldn't also sell it if I owned it. So I'm going to go right down the middle, fairway, straight down the fairway. Call this one a hold. You don't want to sell CSL too quickly. It's done a spectacular job of making my concerns look silly, because they have delivered that sort of growth. They are justifying the PE. Investors still remain really confident. If they can keep doing it, then yeah, you're going to get some good gains. But how do you get market beating gains from here? Well, you either have to have more PE expansion or growth that exceeds the market average growth and keep that PE. That's a tough combination.
A buy and a hold for stock of the day, CSL.